Yeah, hello. It's me, your village boy from the Village Boy Academy, or otherwise known as the Cash Flow Doctor. Yes, I'm here again to talk to you about cash flow. Cash flow, cash flow, cash flow. Yeah, let's suppose you are in a credit economy where you have access to credit card and all that, and you can swap your card or buy anything from the store or anything online. So, in such situation, how do you manage your cash flow? Well, it's still the same principle. You have what we call matching concept. Matching concept is like in this case, we are bringing it to your cash flow management. Despite the fact that you have access to credit facilities, doesn't mean that you just spend money that you don't have or you don't have. Yes, uh, unlike some other places whereby maybe if you are broke, you don't have money, you have shortfall of cash, you either approach your account department if you work in an environment to lend you money, or you go to your bank for short overdraft and all that. The difference is like, okay, you are in control of what you spend. You can just walk to whatever you want, swap your card and pay. So that headache is taken away from you. But that is one leg of the situation. What happened? It's still not your money. It's money that, yes, it helps you to bridge the gap, take away the shame and all that. It's not a case of you go to somebody, other person going to account department and they deny him or her because, maybe the person has always been taking salary advance and issues like that. You are in charge of what you can spend based on your credit limits. But if you want to match your credits with what your income is coming, you can do that, and that will help give you a balanced cash flow management. For instance, if you know, okay, in the next 1 week your wages will come and it's going to be like maybe $2,000, or just figuratively, so you can program your spending not to exceed that amount. Of course, that 2,000 you have to take care of other things. Usually they are what we call fixed costs and variable costs. Maybe you have your rent, it might be a fixed cost. Your utility, in most cases, will be variable. Your car maintenance may be variable depending on how well you use it and all that. Your insurance, in most cases, will be fixed. When you take out all those ones that maybe you have direct debit instruction that they will take away from the provider will just take that money directly from your bank account. So you have to consider, okay, after they have taken this, out of this 2,000, how much is available for me to spend? Maybe the rest is just about $500 for you to spend out of the expected 2,000. So when you go to buy or you want to use your credit card, you have to take this into consideration. And that is why I said the other time that when you want to do effective budget management, cash flow management, you cannot avoid budgeting. So there is a need to keep record to say, okay, I'm expecting 2,000 in the next 1 week. 5,000 are like fixed costs that will go to all this bill and all that. So the remaining 500, it means that if I go to store, I won't go to anywhere to purchase anything, I have to limit myself not to spend beyond $500, because that is effective balance that I will have as at the time I'm receiving that money. It is not even advisable that you budget to spend the entire remaining 500. There should be some leftover, maybe some savings. If you want to apply the 10% principle, you can say, okay, out of this 2,000 I'm expecting, I'm setting aside $200 as savings. And of course, I said severally, that is one leg of the journey. If you set aside 200 as savings, if you don't invest that 200, it's just a deferred consumption, meaning you are going to spend that money. However, there is also a window with credit card. So, okay, when your statement comes, you have a window of like 3 weeks to pay this money. You can, if you keep good record, you can do this such a way to manage that. Okay, your wages every 2 weeks. You can plan, to balance your spending, based on what you are going to earn within this period, and taking also the opportunity of the window where you have to pay back whatever you have spent on your credit card. Yes, they most of the time they send a statement to you and they ask you to pay the minimum. That minimum, I'm not trying to spoil business for credit card organizations. It's a trap. In cash flow management, that minimum payment is a trap, because after you pay that minimum, the rest amount is subject to tax. To interest. You are going to pay interest on it. So there are situations whereby you hear people here that they have maxed their credit. Maxing credit is a time whereby you have exhausted your credit limit. You are no longer entitled to credit, because every month when your statement comes, you pay the minimum and it keeps on accumulating. You are charged daily interest on it, and before you know it, maybe you are actually consumption, you're actually spending on your credit limit might just be about 50%, and the other component is interest charge. And because this will happen when you don't match your expectation with what you are spending. It is very easy to go to the store to swipe the card, pam, you pay, you go. But you have to also think, how do I pay back? So somebody has asked me, okay, does it make sense to have a credit card then? Why don't I wait? I just have a debit card. I don't spend what I don't have. Well, if you can manage that, it's not a bad idea, but most of the time, there are times of emergencies that your credit card may be your savior. So in that case, it's not a case of you go to somebody to ask for a loan, and the person is telling you stories, and you feel annoyed, angry that the person you thought is able to bail you out is not able to bail you out. That is why credit card in your hand gives you that authority, that power to manage your finances very well. What has been your experience with managing your credit card? Do you understand the nitty-gritty of it, or do you want some counseling? We are available. Talk to us. For very little fee. We can get you through it. We can walk you through simple budgeting. Budget is not complicated, but budget requires a lot of discipline. You have to know how to do it. You have to also know you need discipline to implement it. You can write all the budget in this world. If you lack that discipline to maintain it, to manage it, it's going to amount to nothing. So until I come your way again, cash flow management can give you peace of mind if you know how to do it well. Don't worry if you have challenges. I'm just a call or an email away. Talk to us. We are cash flow doctors, and we will fix you. We will fix your cash flow, and you'll be glad you contact us. I remain yours, the Village Boy. Thank you, and God bless.